What's up, everybody? Hope everyone's doing good today. Um, Hope no one got really blown out this past week. It's been some crazy trading. I actually have been so busy with setting up my other work for the year, and also I'm getting married next month. I haven't really done a lot of trading over the past 2 weeks, really, but mainly this past week, I haven't even been looking at the markets too much. But let's talk about what I kind of expected going into last week. Um, Last week I had given a few levels. I want to say it was 45, 44.40, right? Which happened to be the low, I believe. Yeah, 44.38.50, right? So the low by 1.5 points. That was the area I said that bulls need to hold, and as soon as we're above there, we were going to go up and trade um, towards 45.20, 45.50, and potentially overshoot to 46.10. So, and I said that 46.10 traded, I wanted to short that, right? So, didn't quite get there. We got, looks like the high was 45.86. Um, but we got the lower targets, which was cool. If I was more active, I probably would have taken a short there. But I couldn't really babysit a position last week, so no real trading for me. Um, I did take a short on Netflix, made a little money on that I closed right away, and did a lotto on Amazon, which almost worked out but didn't work out. Right, so is what it is. Um, so where are we at here, right? What's happening next week? All right. So this is the 4-day chart. You guys know that recently, over the past couple of videos, I've been sharing this 4-day chart because this is a very important chart right now, right? If we go back historically, right, we're obviously trending way higher above this 30 EMA, right? This is the 30 EMA. This is the 30 MA moving average, right? So EMA, moving average, both 30s, right? Um, so when it's pretty obvious when we're above that, we're trending very hard, right? And the last time we went below this was the 2020 meltdown, right? So we're still below it from last week. We went above it, rejected. So this, that just tells you that for in terms of the distance that we went between the last time that we closed it was damn near 2 years almost, like 1 year and 1 year and 10 months, right? Or even 11 months. No, 10 months. Um, since the last time we were below this, so almost 2 years since we've been below this, right? And in that 2 years, we trended much higher. Okay, so this is a very important spot if you're looking at things from what's going to happen for the rest of the year almost, right? So it's no surprise that we're trading between this. This is 45.19, 45.20 pretty much, major level there, and 43.37. So damn near that 43.30 that we were talking about. That was a major level, not last week, but the week before. All right. So these two levels have become the sort of most important levels. And while that's a wide range, we've got a lot of volatility. It is what it is, right? So 43.30, 43.40 really, and 45.20 are sort of the gateways to a trend. All right, if that makes any sort of sense, right? If we get a 4-day close below here, you can expect probably at least a couple, maybe one and then a recovery, or maybe even two full 4-day candles. So you can expect at least a week or two of a trend lower. If we get it above here, right, that's sort of saying the same thing. Okay, so basically those are the two levels to beat this week, right? 45.20 and 43.30, 43.40. Sorry. Um, so what does that mean going forward, right? It's going to be two. I see two possible scenarios here, and for this we need to switch to the daily chart, right? So we're going from a 4-day down to a daily. If you look at this yellow, I know this line's, this chart's got a lot of crap, but just bear with me. If you look at this yellow line here, this is the 200-day moving average. You see that we obviously recaptured it, and we came back and we tested that on Friday, and it held, right? It's creating a hammer doji candle. But there's a couple things here, right? Red Fridays generally lead to red Mondays. Green Fridays generally lead to green Mondays. Yada yada yada. You got that in play, and then you also, that's some hocus pocus, whatever you want to call it. I mean, there is some math and statistics behind it that say, if you close red Friday, you'll close red Monday. If you close green Friday, so there is some sort of edge there, but it's nothing crazy, right? Let's say 45% in favor or something, right? But the real thing is, if we go back to this 4-day chart, and again, we closed below this 30-week moving average or 34-day moving average, right? So above here, it's saying we're going to trend again, right? We rejected. We created this sword-looking candle, and it closed pretty much damn near at this 44.92 level. Is very important. This is not the real close. I think we closed at like 85. I don't know why it's giving me funky data. Yeah, we closed 85, right? But closed very close to this pretty important level. But the real thing is this: we got to get above here, right? So that next candle starts on Monday, right? So right now, this is a bearish candle, right? So we came back up, we tested this, we created a red sword candle for the 4-day. So one of two things is gonna happen. All right. Once we're above here, you can't really do any sort of digestion. All right. So you're not, once you're above here, the market's gonna want to trend. Once you're below here, the market's gonna want to trend. All right, so this is what I see for next week. I think that there's a very real possibility we go back down and we test this 43.42. This 43.42, 43.30, level. This is a very strong level, right? Once we're down there, I think there's a possibility that we then start going sideways, right? But I do think that this needs to be tested, and then I think that we might have a dull market for basically until we get a close below one of these levels, right? As soon as we get a close above one of these levels, we're gonna trend. So this level rejected. We went up. This was a very strong resistance zone. I told you that last week. I told you, if bears are going to defend, this is the area they're going to do it. They did it. We didn't get the 46.10 spike that I was wanting. We missed it by 20 points or whatever. But the other areas they held, right? So the spike was above the 45.50 for 26 points or 36 points up to 45.86, right? So the area's held, closed below this candle. Now we likely need to go, just like we tested up here, we likely need to go back down here, 43.40, 43.30, and test this area, okay? Once that happens, assuming that buyers step in there, there's a very real possibility that we start trending sideways, right? So we might, look where we're at here, right? Already we're in the second week of February, right? Each one of these is 4-day candles. There's a very real possibility that we trend sideways for 3 or 4 weeks here, right? Into March, pretty much. Now, I can't really say for certain that's going to happen because as soon as we, again, I just want to emphasize this, as soon as we get a 4-day close above one of these or below here, we're going to trend. It's going to go. But what I am saying, there's a very real possibility that we digest in this area, because we can't digest up here, we can't digest down here. If we're above here, we got to go. If we're below here, we got to go, right? So I do think we're going to go back. We're going to test this zone, and you know, there's a high probability that we're going to trade between this 200 point range, just, you know, back and forth, right, for an extended period of time. And then eventually, whenever we get this close below or above, you know, the market's going to trend. So that's what I think is going to happen here. You know, again, I kind of think we're going to go back down here this week, sometime this week. And I want to say it's going to act as support, but I also want to say that that's probably not going to lead to some sort of big move, right? Like, we could very well hit this 43.40, 43.30, and eventually go back up towards this other one. You know, this moving average is going to change. But, you know, I think that this range is going to continue to shrink over time, you know, as February progresses. You know, and we're going to start, you can start seeing how this shrinks here. I think we're going to see the same thing happen. I think we're going to probably trade below it, though, you know, below this. And this is going to shrink. The range is probably going to get a little bit smaller, because right now it's very big. It's 200 points, pretty much. And we're going to digest for a week or two. So I think, you know, Monday or Tuesday, we're probably going to get, you know, a big sell. We're gonna get another 200 point move down, so to speak, because you know, right now we're 44.85 or whatever. So I think we're gonna sell at least 150 points down here. It might even go a little bit lower, overshoot some of that, and then I think we might just go sideways for a bit until the market sort of figures out what it's going to do in here. That could be a week long, that could be 2 weeks long, could be 3 weeks long. You know, it could go all the way. February's a short month. It could go all the way into March, really, right? I think that if it does that, the ultimate resolution will likely probably be to the downside. You know, but again, that we're talking about something. I think that we're probably going to trade sideways for at least a week or two, right? We'll have this initial move back down, and then we'll probably trade sideways. So I think that's what we got. It's probably going to be pretty crappy trading, you know, but it is what it is, right? And so there might be some money to be made on Monday if we open up here, we back test this 45.20, and then we sell off. You know, that'll be a pretty good trade. But besides that, you know, I think that these EMAs and this MA are going to continue to get closer, and the ranges are going to start. It's going to shrink from 200, you know, down to maybe a 100-point range or something, and then we just start kind of trading sideways between the two of those for a week or two. So that's what I see. You know, and again, that entire analysis changes as soon as we get a 4-day close above 45.20, and right now 43.40 for the downside, right? So till then, I think we're going to ping pong, and that's really it, guys. I think that we might have a shitty month of trading until we close above or below one of these. So we'll see how it goes. That's the current plan. I wish everyone an extremely profitable and more importantly a safe week, and I'll be back on Monday kind of guiding you guys through the market of what I see. All right, guys, have a good one.